Hello everybody, welcome to the third and last video of the day entitled The Rally Widens. Lots to talk about, so I'll try to go as quick as I can. There's a lot of good news that is making a lot of assets go up, and so at this rate, if we get another 5 days like this, we'll be back to where we were in February. Anyways, what's the news? Why are stocks up? Well, to the best I can see, there's a lot of positive going on. 3 hours ago, Trump said, oh no, he's not trying to fire Powell, and so of course TradFi is very happy to hear that. There's a rumor of a peace deal with Ukraine, a peace deal rumor, and people saying, oh, this is gonna happening. So of course the market kind of forgot about that the last few weeks, but that could be a catalyst to the upside. There's some positivity as far as trade goes. Apparently India and the US may be finalizing a trade deal. You know, India is huge, enormous country, and it's had tariffs for the longest time. If there was a free trade or near free trade agreement between India and the US, that would be a huge positive. Then you have Michael Saylor talking about the new SEC chairman. Bitcoin, of course, really happy with the new SEC chairman. This is why I didn't put the chart, but this is why Bitcoin is $93,000 right now, $93,200 as I record this. So that's pretty darn amazing, and I think a lot of that going up in the Bitcoin price has to do with the new SEC chairman, who's very pro Bitcoin. And then we had the Tesla call, and the Tesla call, in my view, was always going to be a catalyst. You know, the Tesla is the epitome of a risk-on stock to the eyes of the market. The market is like Tesla's risk on. So we got a lot of positive from Tesla. You know, mainly the big positive is that, yes, it's confirmed. The robo-taxis are getting started in June of this year, right? So 2 months from now, we get robo-taxis in Austin. It is confirmed. That is a big deal. The market was scared that there would be a delay in that. But more importantly, Elon on the call gave us some macro news. He said that he's done with Doge. I mean, it's not done. He's still going to monitor it. But he said he's going back to Tesla in a month, at the end of the month, which means in May, he will be back at Tesla. And so I think, you know, it's always tough to figure out how Mr. Market thinks, but because Mr. Market has been saying, oh, well, because of the Doge program, the GDP is going to be down and we're going to have a recession because government spending is going to be cut, and there's going to be a recession because Doge is trying to cut government spending, to cut waste. In order to not have a recession, we need to have waste. That's literally Mr. Market's thinking. I've seen articles of this grade online on like major publications. Anyways, the point is, Mr. Market, in its dumb thinking, maybe thinking, well, if Doge is down, maybe the GDP is gonna come back and maybe we're not gonna have a recession. And because of that, we are having a re-rating, a lot of positivity in after hours right now, and perhaps continuing into the morning. As you probably watch this video, you'll probably watch this video tomorrow morning, right? Wednesday morning is probably when most of you will watch this video. Anyways, the wild moves continue. Tesla is up 4.6 plus 4.3. So what? We're up almost 9%, more than that. Is what we're up in a matter of a day. So, you know, to think the stock traded close to 220 again, that's pretty crazy. Of course, we didn't know where this could have gone. I mean, this could have gone way down, right? The results could have been way worse, but no. And of course, on the call, he emphasized once again that the drop in sales has to do with the retooling for the Model Y, right? Which is the factories were off for weeks, and there was some retooling going on. Anyways, the Tesla stock is really taking it really well, and taking the news really well. And when it comes to MicroStrategy is up again in overnight trading, after outstanding performance today of 8%, when it also performed well yesterday while the market was crashing. And folks, whether you look at Tesla or MicroStrategy, this is why one needs to be very careful with covered call strategies. They're super risky, right? The TSLY or TSLY, right? or MSTY. These are super risky. Look at the older Y assets and ask yourself why they've dropped so much, right? This is super risky stuff. If you try to write some covered call on assets that are as explosive as this, well, guess what? Even if it's the phone who writes the covered call for you, they give up a lot of upside. Anyways, that was a tangent. Tesla seems to have reignited the market's appetite for risk. At least that's how it feels tonight. And you have stocks that are, risk-on stocks that are pumping, that I own stocks that I'm invested in. For example, ELF. ELF is up nicely in after hours. And look at Robinhood. Robinhood is up nicely. Robinhood, I think, is sensible to the recession argument and is thinking, oh my gosh, now there's no recession because Doge is gone or something like that. I don't know. I expect to see a lot of articles written about this over the next few days. So let me now go into the specifics. So 2 words about Tesla first. So I'll briefly talk about Tesla. So Tesla is up back to $250 in after hours. Tesla is one of these companies, one of these stocks that is always going to look overpriced, that is always going to look expensive no matter what. And it's going to be just like Palantir. In fact, I've never found Palantir to be cheap. I've never found Tesla to be cheap. I could make an extension and tell you I've never found Apple to be cheap. I've never found Netflix to be cheap. There are companies, and this is my one bucket of investing, where I entirely overlook valuation. I don't look at valuation for this bucket because if you look at Amazon, if you look at the 20-plus year rally that Amazon has, absolutely amazing performance, Amazon. If you own it in the early 2000s and you still held it today, I mean, you probably would still hold it today because, you don't want to have that capital gains tax. But, the stock never looked cheap. It looked expensive the entire way to the top, the entire way to being one of the top companies out there, or top 3 or top 4, whatever. It looked expensive the whole time. And my point is, a stock can go up and it can remain undervalued this whole time. And it's possible that it never becomes cheap. And so all that means is that when it comes to a stock like Tesla, for example, I would argue it would be foolish to hope for multiple expansion. The multiple is already very, very high. So this is not a stock that you invest on multiple expansion. This is a stock that is going to consistently look expensive. And so it's consistently expensive. Do you want to take the risk of not owning Tesla in the portfolio, right? If you look at the S&P 500 versus the NASDAQ, there's been a delta in the performance. And a lot of that delta in performance between the S&P 500 and the NASDAQ can be explained by the fact that the NASDAQ had Tesla in it because it's a mathematical system that includes companies regardless of valuation. You meet the criteria, you get in, contrary to the S&P, who it is a committee who decides, and they look at subjective criteria, and that committee refused to have Tesla in the S&P for the longest time because Tesla, quote unquote, did not have enough vehicle models, did not have enough exemplars of vehicles. They only make 2 cars. They're not a real car company. Subjective stuff have kept Tesla from the S&P 500, and you can explain a lot of the underperformance of S&P because Tesla, right? Because Tesla was not in it. And I'm telling you this is going to be a bis repetitas, right? This is going to be, again, because MicroStrategy has been in the QQQ for almost 6 months now. The NASDAQ has MicroStrategy now. It's got a nice position in MicroStrategy, the NASDAQ now. So if you have a NASDAQ, you have exposure to MicroStrategy. When do you think the S&P is going to add MicroStrategy? First of all, it's not eligible yet because of messed up rules, but, on how earnings are defined, point number 1. But then point number 2, when it becomes eligible, do you think MicroStrategy is going to go for that committee? Do you think they're going to be added to the S&P? Do you think the committee is going to take it easy and be like, oh yeah, they own Bitcoin. Oh yeah, that's a real company. Let's add it to S&P. Anyways, that's why I love the NASDAQ so much more than the S&P. Some stocks can stay expensive all their way to the top. And so I have this bucket where I don't judge companies on valuation, and Tesla belongs in that bucket. Palantir belongs in that bucket. A lot of stocks belong in that bucket. Let's talk about the call. Let's talk about the earnings, and we're not going to talk about valuation. We're going to talk about catalysts. Of course, the biggest catalyst is Elon back to Tesla, right? Elon is back to Tesla. in May, and is going to be aside. He's going to be monitoring from Doge from afar, but Doge is going to be done within a month. The market loves this. The market was thinking it would be there for years. Elon's coming back for some reason. For short term, the market loves this. What I personally love is that FSD unsupervised in many US cities is, confirmed or was discussed on the call for late 25. So if you have a Tesla car and that has FSD, you're going to be able to use it unsupervised in many US cities by late 2025. And this goes to the question, who will ever buy a dumb car if you can buy a car that drives itself and you can just sleep or text or watch Netflix or whatever? Who's going to want a car that doesn't drive itself, right? The main feature is going to be the software. The confirmation of a robotaxi launch, that's a big deal, right? And I've read for months analysts saying, it's just another pipe dream. It's just Elon talking. He's always late on the deadline. He's confirmed again that robotaxi is launched between 15 and 20 vehicles on the first day, and I'm assuming they're going to increase that, launched in Austin in 2025. That is a huge deal. Elon talked about supply chain and tariffs. This was talked about, and the supply chain of Tesla is really continent-centric. They have a US supply chain, a Chinese supply chain, and a European supply chain. This is very akin to Alibaba, two world, two system. If you remember, Jack Ma had said that famously, 5-6 years back now. Elon has taken that to heart. There are separate supply chains, and Tesla is going to be the least impacted manufacturer, the least impacted by tariffs. There is a little bit of impact on batteries, and that impacts essentially the Megapacks, mostly the Megapack, but Tesla is vertically integrated, and they're going to ramp the Corpus Christi production of batteries. And Elon said that there could potentially problem with magnets. I assume he means neodymium magnets, potentially problem with magnets, but that's something that would impact only Optimus, and that would not impact the Tesla cars just yet. And given that, unfortunately, most of the market doesn't even give $1 of value for the Optimus potential of Tesla. That's not going to have an impact. So anyways, I think it's just good news, and I'll conclude with that, right? Who will buy a dumb car, right? Who will buy a car that doesn't drive itself? Brand new car, I'm talking about in the next few years. Who will buy a brand new car that doesn't drive itself in the next few years? Well, I'm like Elon said on the call, there are still people that use flip phones. But 15 years after the advent of the iPhone, you have very, very few people that use flip phones, right? And so in 15 years, there will still be people who drive their cars, but there will be very, very few people that drive their cars. At least that's my view, my opinion. Remember the early days, Apple versus BlackBerry. BlackBerry was laughing at Apple. Apple was the laughing stock. Apple came without a keyboard. It was 3 times more expensive than a BlackBerry, and it came without a keyboard. There was no keyboard, and it was 3x more expensive. Who was going to buy that? Well, guess what? Everybody was going to buy that, and of course, BlackBerry, Nokia. That's just an afterthought today. But the market is just so short term, and even sometimes customers, sometimes citizens are very short term in their thinking. Of course, when a car drives itself, it is stunning. It frees up so much of your time. It creates so much value. The car is essentially a chauffeur for you. It disrupts so many airlines. So much of a short-term travel is disrupted by this. The level of disruption that are going to be brought by unsupervised FSD is going to be tremendous. And this is why this is a stock that you can't value per standard valuation metrics. I fundamentally believe that, and that is why I own Tesla. Moving on to Enphase. Enphase is two words on Enphase then, okay? And Enphase is down, by the way. It's down 10% right now. Enphase, at its earnings, Enphase is a former favorite of mine, a former favorite of the channel. Enphase lost me money. I can't remember. I think I lost something like 40% of what I invested in Enphase. So Enphase lost me money, but I needed to do tax loss harvesting, and so Enphase was unfortunately at the wrong place, at the wrong time at portfolio, and it looked very juicy to harvest those losses. And so I sold Enphase in the 70s because I needed to create loss losses, and I did. And of course, now I can get back in, and I think this drop could make the stock interesting, but I think it needs a full analysis, and it should be easy for me to do this analysis because frankly, I know all about the product. I remember everything about the business. I will make a full analysis on Enphase again. I was covering this business very, very, very often. Enphase is one of these businesses where, just like Tesla, but it doesn't have the hype of Tesla, and that's the problem of Enphase. Tesla, there is no denying that Tesla's valuation has been saved by the hype. The Tesla valuation has been saved by the fact that it is the bluest of the blue chips, if you will, by the fact that you have Elon Musk. I consider Enphase to be a very innovative company. I love the product. I think Enphase has so much going for it. I think the opportunity is huge for Enphase, not as big as Tesla, right? But Enphase is a $6 billion company. You're talking about a $6 billion company versus nearly $1 trillion company on the other hand, right? So you got to compare the size of the company to the size of the opportunity. Anyways, the point is, the question for me now with Enphase is, well, first of all, if I had not sold it, would I sell it now? The answer to that is no, but I sold it. The question now becomes, when do I get back in? If I want to get back in. So I'll make a full analysis on that. But I want to point out that Enphase, just like Tesla's current business, the current business right now, without looking at Verizon, it has been killed by the Fed's stubbornness on interest rates. The Fed's magical belief that somehow the current interest rates are sustainable, that somehow we are okay with having a deep hyper depression, that we're driving right into a hyper depression. The number of companies that are going to go bankrupt, households, cities that are going to and the government, of course, right? The 10 trillion that the US government has to refinance, that are going to go bust if we keep these interest rates this high, is insane. And so, of course, what are we going to do about Enphase, right? I mean, when people are strapped for cash because of these interest rates being so high, who's buying a brand new house right now and be like, okay, I'm going to add solar to the nice house that I just bought. When the mortgages for houses are 7 to 8% in the United States, right? 7 to 8%. Think about that, right? That's point number one. And then, of course, oftentimes these systems, they're sold via home improvement rates, home improvement loans, and they're most often between 12 and 14% right now because of the Fed, right? So the value proposition of solar panels is almost nil if you have a 14% interest rate that you got to finance it with. And so they're having a tough time to sell the stuff because of the interest rates. But make no mistake, in my view, I have no doubt the rates will drop back to zero. And if you think I have any doubt about that, wonder yourself why I'm only in high risk on assets. Like my assets are so risk on. Like everything that I own is risk on, at least to a traditional market's view, right? And of course, if I believe the rates would keep going up, do we really think I would be in so many risk on assets? I think this is all a bluff of Powell. This is a bluff that is long, that has long been overdone, way overdone. The rates need to drop. But anyways, the question is, in the meantime, we have a stubborn Fed Powell, and as we have a stubborn Fed Powell, of course, we have bankruptcy after bankruptcy after bankruptcy. So many companies, mostly middle-sized businesses, mostly small businesses, mostly households, mostly cities, banks, right? Silicon Valley Bank, that wasn't a small business. Oops. Anyways, so we have so many of these bankruptcies going on right now because of course, the rates. And of course, look at Cathie Wood. Listen to Cathie Wood. Cathie Wood talks about this all the time. Like so many of the companies, not so many, but quite a few of the companies that Cathie Wood was invested in actually went bust, and that's because of the interest rates, right? Because if you're in multiple rounds of funding, if you're fundraising and you can't get the next few rounds, and you definitely can't with those interest rates, well, you end up going bankrupt. And the question is, can Enphase remain solvent if we have? I think Powell, we may have another 2 years of, a little less than 2 years, but close to another 2 years of Powell. So can Enphase remain solvent? Well, we have a stubborn head at the Fed. And the answer to that in my view, is absolutely, yes, okay, they have debt, but they also have cash, 1.6 billion in cash, 1.3 billion in debt. They have $1 billion stock buyback program. They're slowly eating into it. This quarter in Q1, they bought back $100 million worth of stock, and I'm guessing they will buy more stock now that the stock is trading at $48 because the stock got even cheaper, and they have a lot of firing power on that buyback plan. So they're doing what they need to do. They have huge downsizing activities. They laid off a bunch of people. They're going lean, and they've saved the cash flow. They've saved the revenue. The revenue is 356 million in Q1. Frankly, that's roughly flat. And in free cash flow, Mandy on the call reported the free cash flow, so I'm using that. I should use EBITDA, but I haven't had the time to go look at their report. So I'm just using what was discussed on the call, 48.4 million in free cash flow. That's how many times free cash flow? So let's 4x that, right? Because that's just for Q1. So let's assume 193 million per year of free cash flow. The business, that has changed slightly too. But anyways, that's lower now, right? That's probably like a 5.5 now. But anyways, let's use 6.5. Divided by 0.193, you're paying 33 times price to free cash flow. Probably a 27 or 28 after the big drop of today. Is it expensive? It is. It's not dirt cheap, right? It's not dirt cheap. It's not HIMS cheap. But you gotta remember that there were a few years where this stock was the highest performing stock in the S&P 500. At one point, this stock has it's a cyclical stock, but it's from spending so many hours studying the solutions of Enphase. They have the elite, they have the superior microinverter technology. They're the consumer electronics in the inverter space. They're disrupting Fronius. They're disrupting SMA, the German manufacturers of these big bulky machines. They're being disrupted by these teeny tiny microinverter boxes that cost next to nothing to make, that are getting so many subsidies. And so I just don't think this business is dead. The question is, how cheap can it go? It's a short-term question. I'm usually not good at spotting very short-term trends on this channel. I'm more of a long-term trend type of person. Will the business rebound? I absolutely believe this business will rebound. But we need tariffs with China to abate. And I don't mean the microinverters, I mean the panels, the solar panels. Remember, most of the solar panels imported to the US come from China. So these need to rebase. Don't forget, this is also a big European story. Nearly half of the business is in Europe, so that only applies to the US part of the story. And then, of course, interest rates need to go down. And of course, if you read the call, the little bit that I read on the call, the transcript, Europe is doing better for Enphase. Why is Europe doing better? I wonder. Well, the rates have dropped nicely in Europe because Christine Lagarde in Europe is not bluffing like Jay Powell is in the United States. Christine Lagarde is not living in La La Land thinking the euro can be saved. She's being pragmatic, and she's right. Anyways, that's just what I think. So this was not financial advice, not investment advice. This is just entertainment. I'm hoping you were entertained. Please like, please subscribe. Follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.